Evening traders. Yeah, a little bit different for the opening today. Not the epic fantasy usual, not the Game of Thrones. A little bit piano classical. But nothing quiet about this market at the moment. The trade that we talked about all week and last week is the euro long. Now it's starting to happen. Unfortunately, I made a very emotional decision this morning. Rather than practical or chart base, I closed out a long euro trade on the breakdown of the previous low, and I was like, oh, okay, maybe we're going lower here. I'm not really feeling this rally. A little bit of a higher level. Market was starting to turn a little, and I was like, oh, okay, that's what it looked like when I closed. I was like, all right, maybe the range is held. Now that was obviously a mistake, and a little bit later came out and Le Pen had a bad debate. She's now third in the polls, behind the two front runners, Macron and Fillon, I believe. Now Euro's testing 108, a key level. 108.20 is the high previously. I do believe we're going higher, and significantly so. Not much to stop it now, and the market is incredibly short. And so the pain trade, as some people have put it, is for the euro to go higher, and I think it's pretty much on the cards right now. Impact here on the DAX is that you've got some sharp selling as the euro kept on rallying. That could continue, and I'm looking for that to continue, and for the pound to continue its recovery here. To the top side. Just we've got to get past this speed bump. That is the CPI number. Now, decent CPI 2 and above. Core CPI at, I don't know, 1.6 and above should be enough, I think, to get the market rallying. I don't think there's going to be too many sellers left here. Now, the reason why the sellers are in trouble is that the market is at record shorts. Okay, like literally last week, markets at record shorts. So the chances of a short squeeze are so real, and Article 50 being triggered isn't like there's some doomsday thing. If anything, it moves the dialogue along. Can start focus on the next thing, and you know that's still months away. So perhaps the pound will enjoy a relief rally with the euro, which is showing all intentions of going higher. Same with the Aussie, same with the Kiwi. Kiwi's got its own little speed bumps to get past as well in the next 24 hours. Post that though, we talked about buying Kiwi tomorrow. Any sort of selling based on the RBNZ being dovish is a perfect opportunity in my opinion. And we want to get on top of this. Now that means that dollar yen is probably going down. It's hard to trade. It's a little bit still supported on risk appetite and euro yen, pound yen buying. But the majors, pound and the euro, I really like both of them long. I wish I hadn't closed out that trade on this account, and I'm holding still fairly long here on both of these. Now, the speed at which the pound and the euro rally will obviously affect the euro pound, and so euro pound's very much in play. I like it to the downside, have for a while, but it's not the best way to play the pound because the euro is going to be rallying as well. It's just probably going lower too. The pound usually outpaces the euro in these bigger moves, and it's got a lot more room to run. So you know what we're looking at here is the market to the top side on the euro and the pound. Those hoping and praying it's going down, probably going to get stopped out, right? I mean, that's just the way the market works. Always winners, always losers. If you're not buying, you're feeling the pain, and that pain's just going to continue, right? You can't just expect it to be nice to you. The market's really nice. Rarely going to just stay in a 108, 105 range for too long, and the pound's just rarely going to give you a chance to get out of your pound shorts as you thought the UK was going to, you know, go down forever. And I mean the CPI numbers, you know, if anything, have the possibility of opening up a huge rally, right? I mean, it's obviously if it's a weak number, it's going to get its legs cut out from underneath it, and then the buying on the dip requires faith a little bit in the recovery. But if we're talking, if it's a weak number, 1.9 and below, and the market ends up still higher today, oh god, that's price action that you really want to see as a buyer. And going to Article 50 trigger on Monday, you're really going to be keen here. So yeah, I'm expecting these levels to break to the top side, and I'm pretty adamant that it's going to happen. I'm seeing you know, when you see a trade and you see it start to develop, you know it's not this trade that you're talking about. You're talking about the next 300 pips higher. And that's where the money's made. So letting your trade run is very important. This is a little battle going on right now with the buyers and the sellers and the people taking profit from earlier in the rally. But you know, there's little reason to be short here. There's a very clear sort of distinction between the ECB changing and the Euro politics getting dragged back out of it. There's no data from America for the next couple of weeks, and it's just an opportune time to attempt this rally. And so it's to me, it would be very odd for this to fail. I mean, obviously it can. No trade's more than 70%, right? But it's to me like the highest probability trade we've had in a while that the euro is going higher in the next couple of sessions. So saving some sort of new headline, new sort of reason to be short, and that the only reason I could see probably coming is going to be from the US dollar side. Fed speakers have to come out in a chorus suggesting the market is underpriced rate hikes. And so far we've had a few Fed speakers and they haven't been too aggressive. You can check the 10-year. We haven't checked that for a while. It's not doing anything too exciting from what I see. Apart from being under 2.5 still. Yeah. Let's see if we can get back above that. That might short circuit this rally, but other than that, right, we've got ourselves a nice scenario here where the euro has this upside potential. Same with the Aussie. Aussie's got big stops at 78 and 75.50. It will be hard to stop this if it begins, and if the dollar yen starts to fall and the DAX starts to fall and then the Dow Jones starts to fall, that's going to add fuel to this trade, this domino effect that we're talking about. But we'll be trading the UK CPI in a little bit live. Hopefully we can make a little bit of money out of that. It's definitely some buying going pre-hand. I don't really like the market buying pre-game. That leaves it open to profit taking, a little aggressive, you know, on a spike higher than, you know, the sort of profit taking can get very aggressive, and it makes it a little bit more messy for the next 12 hours or so. But you know, it's showing you a little bit of who's scared right now, shorts or longs. Right, shorts are definitely scared, and half the reason I make trades is because of that straight up fear analysis of what's happening in the market. Shorts in the euro are just like, please come back down. Like, who's hoping right now? All right, who's hoping? Those the short Aussies, they're hoping. I can tell you, I've got 100 clients hoping it goes down. You know, oh, is the Aussie going down? It's this really nice level. Probably not. Maybe. I mean, okay, I can see the same thing you looked at last year. It's it found resistance here. It's like 8 times, right? Of course, it's a good level to sell at. Yeah, okay. Apart from this rally into it is sort of like a relentless rally that is hard to envisage stopping right now. Right? I mean, it can easily see another move to 80 cents here, or wherever your stops are. Alright, so let's just find out where the stops are of the euro sellers, where the stops are from 106 and 105, and where the stops are for the pound sellers below 125. You know, probably 127 to 130. Now this doesn't mean that the market's gone up forever. It's just right now, Yellen gave us a free pass on a trade, which is short US dollar, and the market is beginning that trade, I believe. So let's see how it develops, and I'm pretty excited about this. And obviously it's you know, if you watch the market a lot, you get periods of what you believe is happening, right? And then it's like, well, if this is happening and I believe this is the reason, you know, the next 300 pips can happen. And so I'm excited about the next 300 pips, not so much about the 50 or 60 pips I'm in profit now. It's just the next little bit, and that's you don't get that sort of feeling very often. I mean, you can sit for months waiting for something to happen. The market can range for months without having sort of a topside argument or a breakout argument that makes sense to you. To me, it looks like the US dollar's in a lot of trouble. So it's short term anyway. Yellen speaks later in the week. That could be something which will save it. But right now, you know, that's something. I mean, the Trump failing FX RAM. Trump failing is part of this scenario. Trump getting impeached is part of this scenario. Trump not being able to pass his healthcare vote, let alone his budget, is part of this scenario. I mean, there's lots of ways where, and that's an accentuation. That's 112 to 115 on the euro sort of move, or 120 eventually if something really serious happens to Trump's agenda, because the Trump trade is half the reason stocks are up for 2,000 points. So Trump gets impeached or something, then stocks are going to fall sharply. Yeah, you're going to have not just political issues, but his dream, his agenda issues. So yeah, I mean, this is opportune moment, I believe, if you're going to sort of make a move against the US dollar. I believe it happens now. Let's see how we go. I do want to get some sort of longer term trades in place here, and then I want to read that price action on Monday. I'm really excited about Monday's Article 50 announcement and the reaction from the pound and her speech, right? How it comes across and if it can get that next rally. Yeah, so I'm pretty excited here. I can see monies. Monies are what I get excited about. That's why we're all here. You know, I rarely get so excited, apart from when I'm buying dollar yen on that big run. You know, if you remember a couple of months ago, I was super excited on this rally. I was like pumped up. I was telling you guys here at 108, guys, this can go to 114, 115. Like it was that sort of same sort of mentality. I could see the market change and break. You know, it broke that level. I was like, ooh. And the yields were just like up so much. The same time the yields were here. Last time the yields were here, the market was like 118. And so, you know, we're sitting here and we're like, where should the dollar yen be? Well, 500 to 1,000 pips higher. Yeah, and it's like a yield thing, but it's like, wow. You know, and the only reason the market wasn't higher because it had gone up, you know, 500 pips in 5 days or something, right? So the market was like, well, we can't go faster than this to settle down, and it just didn't stop. You know, so I don't know if it's not that level of intensity, but it's potentially, you know, the start of something big. I mean, Trump versus Merkel. I mean, I watched some of those videos today. I'm like, what the hell is going on here? I'm looking to shake your hand and shit. I'm like, fuck, this is so unpresidential. And I mean, he had a good couple of weeks, right? He had a good couple of weeks without the rubbish. He's handled this whole Obama tapped me thing so badly that, I mean, it's people. He had the opinion poll came out. He had the lowest approval ratings, lower than Obama in his 8-year period in the last week. So, I mean, obviously impeachment stuff still months, and he has to do something really bad, right? But he's that sort of personality. I'm just like, wow. His temperament, I think, is going to get him in a lot of trouble. But that's something later on. We can talk about that if it happens or not. Okay, but his agenda definitely is under pressure. Yeah. So yeah, it's we've got ourselves an interesting setup here where the market's testing these big levels, and if it breaks out, we've got the big moves to the top side, and then we can sort of play it afterwards. I mean, we're literally going to be buying more euro above 108.30. If we can get above 108.30, 108, say it's 108.70 tomorrow, it pulls back to 108.50, 108.40, we're buying more, yeah? We're going to be brave. Traders, we're going to be brave. We want the big pips, not the small pips. Into the breach. It would really help if stocks fell though. You don't have that sharp catalyst without dollar yen being involved, and I like that a little bit more. So yeah, this pound dollar is coming out in 7 minutes. 7 minutes. Let's have a little look at it. Deutsche Bank came out a little report earlier. Pound shorts at record high. Yen shorts also extended. There was also a sharp reduction in euro shorts. So things are happening, guys. ECB is definitely signaled the beginning of the end. Record shorts. What do you think happens after record shorts? The market fall? No. No, 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 no. Aussie's getting a bit long. Aussie might be... Kiwi, look at this. Kiwi's still short. Jeez. Gold's always long. Literally. Don't get my conspiracy theories going on gold. So yeah, positionally there's huge amount of movement for the pound to go higher. We just need that catalyst, that spark, that price action, that Bank of England talking about rate hikes and a strong CPI number. And we're not talking a 100-point rally, we're talking a 300 or 400-point rally. In fact, we have to go back in time to find the resistance. Testing that level again, jeez. Get out of here with your little downtrend. We've got to bust that. I mean, this chart will look really bad if these numbers coming out in 5 minutes don't, you know, we end down here. It's like, oh, okay, maybe not. But yeah, I'm not going to be short going into that Article 50, that's for sure. If we're sitting above 125 come tomorrow, you know that we've got ourselves the beginnings of a potential big rally. And 107, you know, above 107.30 tomorrow on the euro, that makes sense as well. What else we got here? Some gold analysis. Look at that later. Look at a bit of more CTF review. So the positioning is just too negative, right, for the pound. 100 and like it's just crazy. So one of our local banks, they did put out a little report. We'll look at that after this announcement comes out in a couple of minutes. Oh, we might as well just review the traders. How's it going here? Pistol Pete's doing well. In the top leaderboard, BMM, Pistol Pete fighting for the top trader in March. New rules on this trading competition, you've got to do 50 trades. So this is going to become a lot more open. Pistol Pete doesn't need to worry about doing 50 trades. God, what is Pistol Pete's little MO? So I wonder if he's got an EA signal selling here. Yeah, so the report we're going to look at in a little bit is from Westpac here on the pound Aussie. Definitely got some potential for that pair to rally. You know, you can imagine a scenario where the pound recovery trade happens and then some negativity comes through from China, and we're not talking 1,000 pips on that sort of scenario, we're talking 2,000 or 3,000 pips. So pound, how are we going here? Let's have a little look. Euro stalling at 108, pound stalling into this announcement. We'll bring up some euro pound, we'll bring up the pound itself. We might be buying this later. Two minutes. Alright, so the important one is the headline and the core. There's a whole host of data released. Headline and core. PPI is obviously, if it's picking up, helps as well. Real estate helps as well. So this is a fair bit of data going to be dumped out on us. We're looking for 2.1 or 2.0. 2.2 would be just ridiculous, the reaction. And core, if it wants 1.7 or 1.8. It might be muted if it's 1. It's 2.0 and 1.6. It might be muted, but it's probably still going to result in pound higher. So small disappointment's not going to be enough to knock this out, I don't believe. Let's have a little look. Ten seconds. They cannot keep their information secret, huh? Oh shit, it is on like Donkey Kong. 2.3%. Oh wow. Wow, we wow, we wow. We wow. Okay. Yeah. Yeah. I mean, the leaking, you know, we got stories out that that's been leaked, it's strong, right? I mean, conspiracy theories would be pretty excited by that. Yeah, now the pricing in of rate hikes is going to be happening right now. And you're going to probably see a sustained rally here. Now, it's a bit dangerous the first, 12 or 24 hours, right? But, yeah, pound Aussie, pound yen, euro pound shorts, obviously, pound Kiwi if you think that the dairy product and RBNZ is going to come out, yeah. Let's have a look at pound Kiwi. These are potential big rallies here. We might even play a bit of pound Kiwi just for fun, just for funsies. Pound Swiss. Why not? That should be fine tomorrow. Where are you, pound Kiwi? Yeah, we'll see how we go, guys. That's enough. That's three trades. Alright, guys. This is going to be interesting, right? Get yourself a big rally here, boys. Get yourself some big rally. Got some monies coming in. Yeah, was it official news, a leak, or what? Whisper number? That's just, it's an insane number, right? So insane that, if you're working at the statistics bureau, you probably got some people telling you this is tradable. So you don't leak tradable information, right? You only sell tradable information, because this is, if you knew that information early, that's worth millions. All right, that's a huge beat. Bank of England is back, right? This is something that will be talked about for weeks and months ahead. Core CPI jumped to 2.0. Wow. 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 Guys. Everything to the moon, Jenny. Everything to the moon. Because you've got a record short situation. And then you've got all of a sudden a central bank that is going to be potentially swayed to raise at the next meeting. That's how feverish it's going to get. So we'll target 125 to begin with. See how we go. Pound Aussie. We see pound Aussie extending towards 153. You guys are wrong. Let's read a bit more. This is generally where the pound Aussie trades. Still around 3,000 to 4,000 below its median. Pips below. Interest rates differentials show that if you didn't have Brexit, it'll be up maybe 4,000 pips higher. It's nothing from the RBA lately. RBA, if anything, is going to be a bit concerned about that employment data. So I don't think that next meeting they're going to turn at all. There's some concern about our housing bubble, but that's not it. Bank of England. Now this has changed right now. This percentage change. Probability of a 25 basis point rate hike in the next 6 months would have just changed dramatically. Dramatically. Alright. It's probably up towards 80-90%. Everything else is just immaterial. This is literally 2 days old. It's too old. So yeah, I'm pretty excited by this, guys. Let's see how we play out in the next coming 24 hours. So just focus on the pound, and then when the pound gets to those levels that you like, then you can talk about. So 125 is a big, sort of just big figure and just general resistance. 125, 60, 70 was where it stalled out last time. We got excited before. Remember, it was way too early. But yeah, so above that we've got open air. Trend line break. So above 125.50 all the way to 127, above 127. Probably go down to that previous sort of low, so 127.88. Above 127.88, then 130, okay? So we've got a few little targets to get to. The coming days and weeks. Nothing huge for the pound. It would have to go back below, say, 123.40 for us to be worried. Then we're wrong, right? Something we just misunderstood how bad the Brexit risk was. Alright, guys. Well, yeah, I'm pretty happy with that. That's pretty excited by some of this movement. Here we are hoping for like a 2.0 comes in. Jesus. Jesus, 2.3%. Pound yen's a little bit more mixed because of the chance that dollar yen falls and the Dow Jones falls in coming days as the euro rallies. But yeah, I mean, it should go higher, right? It's above 140. Now we're talking probably. Let's see if we can clear some of that. That's not much resistance really. Clear a little bit of this indigestion. Target 142.70 straight up as a potential. I mean, with the pound yen, you got to give it 200, 300 points, right? You don't target nothing. But it is a fair bit to do with how dollar yen goes in the coming days. The scenarios here where dollar yen goes down to 111.50. So yeah, this should be interesting for the pound. It does not hurt at all. Now who's worried? Sellers or buyers? Yeah. In that game of fear in the FX market, the sellers are now terrified. They're literally looking at the same chart, figuring out where they've got to put their stops to not get stopped out. Yeah, but yeah, pound yen FX RAM. I mean, just keep an eye on dollar yen. If dollar yen starts moving aggressively, you probably just cycle out of pound yen into pound. I mean, Article 50 on Monday is still a big event. you know, there's still, you know, chances that the market will wait to see how she comes across and does a big speech. But you know, that was you know, what we have here is potential for big moves. Yeah, because we're in this for the pound recovery trade. So hopefully we can talk about that in the coming months. Alright guys, might leave it there today. I had some really good news, other good news today, so today has been a good day. It's on the personal side, so everything is coming up Millhouse today. But we'll review how the price action goes tomorrow. Right, we'll be back at 9 GMT. We'll see how it plays out. I mean, everything can happen in the FX market. We could be sitting here with, you know, our heads in our hands saying, "Oh, we bought too early." The market had that vicious reversal no one saw coming. But you know, as a Fed speaker comes out and crushes, helps the US dollar rally. But you know, I think this is a fairly strong chance here. This is I never call 80%, but I'd say maybe we've got 75% that the pound's going higher today. Trade safe though. Never trade too big, especially for breakouts. You don't trade your full size, you trade your half size. Add to it as on pullbacks. If say 125 stalls or something like that, you can add to it up there. Alright guys, be back tomorrow at 9 GMT.